You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. If you're listening to us from our main network feed, so you get all the shows. First off, bonus points for you, gold star for you. I know a lot of you come in that way, but for those of you who don't, maybe you're new, maybe you're just coming to the show for the first time, or maybe you just like to subscribe to the feed, that's to the VolView show, that's fine. You could do that, but there's a whole other world waiting out there for you. Easiest place to check it all out, our daily news show, Option Block twice a week, VolViews on Friday, TWIFO on Friday, Advisors Option, Tech Talk, all the fun stuff that we do when we're not talking volatility here on the old network. Well, the only place to really find that is, of course, the network feed. You can find that iTunes, our website, Stitcher, our mobile app, pretty much wherever you find your favorite podcast program. So if you're sitting there and you're saying to yourself, I need a little bit more options content in my life, jump on over to the old network feed. I think you will find it enjoyable. If you like this, there's a lot more of this waiting for you over there. And of course, wherever you listen, it could be iTunes, wherever. If you're so inclined, if you like what you hear, leave us a nice review over there. People tend to smile on that sort of thing. So it's always nice to have a little. Don't ask questions there, though. If you have questions, hit us up via the usual ways, social media, email, website, that sort of thing. We tend not to read the reviews in a timely fashion. So if you have a timely question, it won't get to us in time. Hit us up the normal ways for that. And of course, if you're super hardcore, we have a nice little bonus for you. Every Friday, noon Central, 1 p.m. Eastern, via Mixler, we go live. So you guys can see how the sausage is made. A little bit of a glimpse, perhaps a disturbing glimpse, behind the scenes into the world that is VolViews. And of course, however you listen, questions, comments, insights, pearls of wisdom, we love them all. Hit us up. You guys know how to find us. And joining us on the old program today, let's go in order of proximity. So this guy, I know who's closer than the other one today, because one of them's beaming in from, I'm not sure, it's not quite a new record, because I think Hong Kong would be farther, but still. It's a good one. Let's start off closer to home. He may be down the street. He may be in Riverside. He may be in Detroit. Who knows where the heck he is? He's the greasy meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Hey, great to be here. I'm enjoying the beautiful sights and sounds of a town designed by Frederick Olmsted, beautiful Riverside, Illinois.
You do more plugging of Riverside than I do of Skippy's Euros and Lemonade in St. Charles, Illinois. So we both should be on the walls of our respective places. Maybe you should be on the wall of the town hall there in Riverside, or at least on the Tourist Bureau at the very least. You had to have sent at least 3 people to Riverside over the years, at the very least. And, of course, joining us from a little bit farther away from Riverside, he was just in London for the big CBOE Risk Management Conference Europe. And then, lo and behold, now he's beaming in from Tel Aviv, because why not? He's Mr. Russell Rhodes He's all sorts of things over there at the CBOE. I'll let you tell us what he is. Mr. Rhodes, welcome back to VolViews, A, and B, this is not quite your farthest, but this gets points for distance. Well done, sir.
Well, this is as far in the future I have ever called in, maybe. No, I guess I am. I guess Hong Kong is still farther in the future as well. But Tel Aviv, it's 8 p.m., it's Friday night, and I'm going to talk options, and then I'm going to do some laundry.
Oh, it's 8 p.m. So
living the dream, baby.
8 p.m. Do me a favor. Tell me where VIX closed so I could use it for crystal ball in like an hour.
VIX closed at 10:53.
Perfect. I'll write that down.
You guys out if that's where it ends.
I'll write that down right now. So in an hour, that will come handy. Russell beaming in, not just from far away, but from the future. Crazy town. Let's get to it. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show we break down the big trends, stories, developments, trades, activity in the world of volatility. We're going to kick things off, actually, before we even get to, VIX Cash, VIX Options, VIX Futures, all that fun stuff. Like I said, Mr. Rhodes joining us from overseas, coming from the European contingent of the Risk Management Show. I do want to check one of those out one of these days. I have yet to have a chance. I missed Lisbon. I missed London. I missed Dublin. I missed a bunch of them now. I missed all the European ones, unfortunately. So one of these days, I will have to go check it out because I know there is a vibrant European institutional options community. They love SPX. They certainly probably love VIX. So I would be interested to see what that audience really is into. For whatever reason, particularly in Central Europe and around France, they really seem to just gravitate towards SPX and VIX. I don't know what it is, if there's a cultural element to it or what it is, but there is a huge institutional interest in these products over there. So I'm sure he had some interesting stuff. Mr. Rhodes, you're fresh off it, if not perhaps fresh because you're 8 hours in the future. But that said, walk us through what you saw this week. What were some of the highlights, the interesting papers, the interesting pearls of wisdom coming out of the RMC this week?
The first thing that was most interesting was Chris Kincannon gave one of the opening talks, as always, an exchange update from CBOE, and he gave an exchange update and announced a new product that's coming out pending regulatory approval, and it's not Bitcoin. We actually one of the things that we do at RMC every year is we have these meetings with small groups, small group of people from CBOE and small groups of people that are attending from different parts of the world or different segments of our industry. And last year, somebody pointed out that that they have difficult time getting sector exposure via options in the U.S., and I don't know the specifics of this, but apparently ETF options are somewhat cumbersome to be traded by some institutions in Europe. And in fact, that probably is the answer to the question that you were posing a little bit earlier, where you were saying for some reason they love SPX options in London and Europe and in Paris. And it must have something to do with they're easier for them to trade. So they asked if we would take a look at creating sector indexes and sector index options, and those are in the regulatory process right now. I think there's 10 individual sectors within the S&P 500, and we should have option index options available for trading on all 10 of those. I'm not even going to guess a time. I could guess a time, but I'm not going to. I'm just going to say pending regulatory approval to keep myself out of trouble.
So, Russell, would you say that you listen to traders from London, you listen to traders from France, you're listing a retail index, listing a retail index options that might sell underpants?
Oh my God! Can you mute him, please?
I wish I could. The magic,
please.
Here, let's see what I can do. Let's see what I can do. There we go. How's that? Is that better?
I knew exactly where that was going. Having a 10 and 11-year-old daughter. That's how come I can handle Mark Sebastian so well. But also, the other thing that I want to say with respect to Kincannon is he asked for a show of hands as to how many people were at risk management for the first time, and it was about half the room. Which I think shows the growth in interest for SPX, VIX, RUT, and all things, U.S. markets in Europe. We've been trading in extended trading hours with SPX and VIX options, and of course VIX futures for a couple of years now. The liquidity, because we've got more liquidity providers now than we've ever had in those markets, has improved dramatically. In fact, Matt McFarland of our London office put together a study and a white paper showing that the liquidity for putting up block trades, and you can actually put block trades up electronically during the extended trading hours, that it's very similar to what you get trading in the pit. So it's a very viable market now, and we're continuing to see extended trading hours or non-US hour trading volumes grow. Now, people don't see what Mark Sebastian and I see coming from Mark Longo, but he made a little snide comment in our show notes and said something like, I'm sure you're going to tell us all about harvesting volatility risk premium, because that has been a major topic. It wasn't discussed as often as it has been in the past.
Wow, blowing my mind, sir.
That's been the theme coming out the last couple of years. I'm not saying it wasn't talked about, but there was a lot. In talking to the regulars toward the end of the conference, two things that you heard a lot more at this edition of risk management than we've seen or heard at other ones. A lot of discussion around dispersion trading. A lot of it.
Oh, you know what? That would make some sense. That would make a lot of sense, Russell, because dispersion trading had been, we had kind of gotten away from it. There weren't market makers doing it. There weren't big groups doing it. I remember a couple of years back, who's the guy from Goldman that's really good, that's their speaker?
Buzz Gregory?
Yeah, Buzz Gregory was on.
The retired Buzz Gregory.
The retired Buzz Gregory, but also a great guy, Buzz Gregory. And he's showing that, single stock vol in the S&P 500 hit like these crazy lows while the VIX hadn't. And now we've got another scenario where we've got traders coming in and trading VIX, and VIX is hitting new lows. And I don't know exactly where single stock vol was, but there is definitely an opportunity for that capture, because so many people have gravitated directly into the index options and moved away from a lot of these single names, that you now have a real opportunity to potentially do some dispersion trading. And Mark, one thing I will comment in terms of volatility risk premium, when the VIX is threatening 9, or threatening to dip below 9, premium harvesting is a lot harder. I was commenting, at Carmen Line, we do some premium harvesting, and with the kind of pop that the VIX above 11, the amount of extra premium you can get relative to what you can get out of the VIX when it's at 9.5, it's like night and day. It has been, so I'm not surprised that risk premium harvesting is a little less. And with the amount of edge that I think is there for the taking in dispersion trading, I'm not surprised that it wasn't a big topic. But that's kind of neat to hear, because no one was talking about dispersion trading 2 years ago, like no one, and no one was doing it.
And we've seen a dramatic improvement on that. Another topic, just with respect to dispersion trading, something that was noted was we've seen a lot more sector rotation since Trump got elected. We initially saw, a concentration of domestic stocks, healthcare. Maybe they're going to benefit from a change in Obamacare, which never came around. The financials seem to get some love because maybe we're going to see less regulation in our industry. You've seen a lot more industry theme plays in the last 6 months or so than we've seen in some time, and I think that had something to do with it as well. Needless to say, it's not me thinking that. I'm just repeating what some of the smart people on stage said. The other word that we heard a lot and if I had you two, if I made you two just keep guessing over and over and over and over again, you wouldn't get it in the next 43 minutes. So I'm not going to make you do that. But it was market timing.
I would have guessed harvesting risk premium all day long because that's
you just would have kept
market timing.
I know. See there, Mark's agreeing that that's a little bit of a surprise. It was more, and this is my thinking. This isn't something somebody said on stage, but I think maybe the market timing got thrown out there because so many people have gone so long either trying to catch the volatility spike or they've been hedging themselves continuously and they're tired of paying for it until they think they're going to have to pay for it. I know it sounds overly simplistic and silly, but the timing thing came up a lot, and I don't think I'd ever heard that word. The only time I maybe ever heard that word uttered at a risk management was maybe somebody saying, "Well, you can't time anything."
So are you talking about?
That's usually how it breaks down. Is that's a futile effort. But.
Yeah.
So you talking about just-in-time hedging, or are you talking about timing in terms of strategically getting long short, or when it's a wow.
It was just, I think people wanted to be a little bit more opportunistic, kind of going along with what you just said, that harvesting the risk premium, it's still working. When something's becoming a more crowded trade, in order to profit, you really do need to be picking your spots a little bit better. We also, I think, the first day, we had Natasha Junjunwala from Goldman Sachs was one of the presenters, and her session was on timing considerations for short volatility. And it was a combination of, talking a little bit about opportunistic, but actually talking about how if you implement your short volatility trades at the end of the day or the beginning of the day or the middle of the day, it can make a huge difference in systematic strategies. And I'm not going to give away what works and what doesn't. That's the stuff you have to come to the conference for. But there was a big part of that. That was a big first day.
That's fascinating.
You got to pay the big bucks to hear that stuff. So, Russell, you kind of alluded to this really quickly. I know you've touched on this before, but I'm kind of curious. I've been to the U.S. RMCs. I know the makeups there. A lot of practitioners, fund managers, a lot of maybe asset managers and asset advisors who kind of want to learn about it as well. What's the attendee breakdown in Europe? Is it a different crowd? Who comes to this thing?
You probably see they're a little bit. Their pension fund guys are a little bit more willing to be more dynamic with the things that they do than pension fund guys in the U.S. So I think you probably see more of that. Otherwise, it's pretty much as far as what people do for a living, the same sort of balance, where it's really a big portion of buy-side people, either equity managers that use options and volatility for risk management, or pure volatility players. The one thing that's really cool about the conference over here, it's about 50% U.S. people and 50% European people. So you get, and very often the presentations are a combination of somebody from London and somebody from New York. So seeing, slightly different approaches or slightly different opinions about things, that's one of the great things about RMC Europe, is seeing the compare and contrast of the Yanks and the Brits, or the Yanks and the Europhiles.
Russell, was there any trends in kind of because Europeans love their structured products a lot more than people in the U.S. Was there any interesting takes on structured products that popped in over the last year relative? Was there anything kind of discussed along those lines while you guys were there?
I'm looking through the schedule because there was a session on designing dispersion trades, which could be taken in that light, where you could create a systematic approach. What was really, really fascinating with respect to it, and this does go along the lines of the structured products, because the big banks are not able to hold the kind of risk that they have been in the past, there was a discussion around the risk behind structured products. Some of it is actually being laid off on the buy side and creating opportunities for the buy side, which is something I hadn't thought of or heard discussed before.
Oh wow,
yeah,
that's interesting.
Because you got to come over here, man.
I want to. Did they announce where it's going to be next year?
I know where it is, but I didn't hear the announcement, so I can't say Ireland.
It's super secret info. I'm sure because it's a European crowd, had to be a huge breakout just about warrants and volatility of warrants, which I'm sad that I missed. That said, really quick, we got to keep rolling. I could probably talk about this for a while, but we got to get into some other elements too. But really quickly before you jump off, Russell, the one paper, the one presentation, the one thing that kind of blew your mind, super surprising, didn't expect it, weirdest, kind of resonated for you the most. Really quick, go off the top of your head.
It was actually the one that I just mentioned, the structured products and taking and the structured product guys taking the other side, or the buy side taking the other side of these things that are being created and getting some edge out of doing that with respect to what they're already with what they are doing. I'm trying to find the actual it was the current volatility environment, the impact of fundamentals and flows, and talked about how and how to hedge cross asset portfolios with risk transfer, and that's the sell side offsetting to the buy side.
Whoa, getting some music there. I happened to pull up the CBOE Risk Management Conference. You want to learn more, you can do that for yourself, CBOERMC.com. Beware, it plays some music when you load it up. So CBOERMC.com to learn more. They got events in Asia. They have events, of course, in the U.S. That's usually in Q1. And then in Europe around this time frame, and as Russell hinted, perhaps back in Ireland this time next year. Let's get into this week. Of course, it's been a crazy week for vol. Start like kind of similar playbook to last week, starting off a little richer, then kind of trending south, shall we say. In fact, today, as we're recording this and streaming it live here on September 15th, right about a little bit after noon here in Central Time Zone, the one true time zone, VIX has flirted today, intraday, with a little single digits. In fact, it hit 10.00 out in the VIX Cash before rebounding. It's right about 10.20 or so right now. So it hasn't quite made up its mind yet. Does it want to be single digits? Does it not? At least for the time being, the answer is no. But we all know VIX is a fickle mistress. By the end of the show, by crystal ball, we could already be in single digits. That said, Mr. Meatball, a lot been going on this week. What's been catching your eye from a vol perspective this week?
Well, how about we talk about the fact that after this, that the market has finally decided that North Korea is not news.
Yeah, isn't that fascinating? It's fascinating. Single-digit vol with missile tests going off in North Korea.
Well, I think that what the market was really worried about was that, it was more of it turns out it was more of a not trusting Trump than not trusting the North Koreans. And so now that we've determined that he's unlikely to blow us all up, we kind of ignore the kind of what's going on in volatility. And that has been kind of the trend. When I saw the news last night, I was like, each of these has that kind of a half-life to it, right? We went to above 16 with the first, almost 16 with the second, got to about 14 with this one, and then the one today, the VIX opened up all the way up to 1066 before they plastered it. The other thing, though, and this is kind of interesting, this opens up the door, I think, either today or on Monday for a complete pasting of the September future. The September future has been stubbornly expensive relative to the cash index. And, the belief was, well, what if, the UN regime is going to fire another missile, and that's why vol's staying high. Well, they fired another missile. VIX is off on the news. I think we're set up for September to settle today below 11. Lots of interesting order flow. I think a lot of people were unloading puts over the last few weeks, thinking like, we're never going back below 11 and 12. And I'm seeing a lot of people rolling short puts back to November for as cheap as they possibly can at the 11, 11.5, and 12 strikes.
Yeah, famous last words. Can't get back there. We got 5 hurricanes in the Atlantic. We got missiles coming out of North Korea. Everyone was scrambling to buy protection last weekend, just this time last week.
Yep,
everyone wanted
puts.
everyone wanted to have all the puts, and then now all of a sudden they're dumping them. Yeah, it's just short term memories. How many times have I said on the show that the vol trading market amongst the most schizophrenic, bipolar, call it what you will. They got to have it. They can't touch it all. Sometimes in the same session, which is always endlessly fascinating to me. Speaking of things that are endlessly fascinating, Mr. Rhodes, I know you've been busy traveling hither and yon and breaking down a lot of interesting dispersion trading over there in Europe. And in between your many miles logged this week, anything catching your eye out there in the realm of volatility, sir?
I haven't been able to pay enough attention, but I do have a bunch of weeklies trades to talk about.
All right, we'll get to those in a couple seconds.
I've been.
I appreciate that. I appreciate you've been able to watch the weeklies. I'm impressed.
Yeah.
They even have weeklies.
I'm amazed that VIX is where it is.
I am too.
So.
They list weeklies over there in Israel. Huh? You can look at them and see them. Interesting. Good stuff.
Yeah.
Stuff.
The best stat about North Korea. You got to hear this one. People in the United States spend 2 times North Korea's GDP on their pets every year.
That
sounds about right.
That's incredible.
That sounds about right.
And yet we're worried about this ridiculous little regime. It's unbelievable that they are of any vol at all. And it's just crazy. And it's interesting. The one thing I would say is that we're at a new all-time high. But VIX has seemed a little firmer, even with the kind of things getting plastered today. VIX is firmer, and I'll tell you, they're not coming in to just plaster the futures like they have been in the past. I think a lot of contango players got their butts beat over the last month, and I think that there's some wound licking that's allowing the curve to stay a little steeper than it has in past months.
Yeah, that curve looking a little rich, at least coming into this morning. About 1 1/3 handles out for the front month to the cash, and about nearly 3, about 2.775 or so out there for 2 months out. It's going to change a little bit today with today's cash drubbing, but it should be in that wheelhouse. The Skew index also creeping up. As we keep flirting with new highs, you're going to see probably some of that Skew index creeping up, and that's exactly what it's doing. Up about 7 points from this time last week. It was around 135 last week, right around 142, almost 143 actually this week. So flirting with a little bit higher. VVIX also not quite at 100, but still mildly elevated. Let's say around 90. It's not quite at the bottom of its recent range, which we've said is around 75 this year so far, in the past 52 weeks or so. But it's 90, a little bit of juice, but nothing to write home about yet. We'll see if VIX keeps moving around today. Maybe that story will change. Speaking of stories, it is time for Russell to illuminate us with his epic saga that is VIX weekly options. It's time for Russell's weekly rundown.
Now, Russell's Weekly Rundown.
All right, listeners. Yes, they even have that drop there in Tel Aviv. Russell can't even walk down the street there because they say, "Oh, wait, you're the Russell's Weekly Rundown guy." They love his music, famous around the world. Mr. Rhodes, break free from your adoring fans for a moment, if you will, sir, and regale us with, let's say, 28 minutes or so of some hot weekly VIX options action.
Look, it's Russell from Russell's Weekly Rundown. I say that all the time.
Who doesn't say that?
Yeah.
Hordes of children.
It's like I used to introduce Peter Lusk as Peter Lusk, host of Strategy of the Week all the time, and he just turned beet red. Poor guy. All right. The very first decent-sized trade of the week. I don't know if this is that big, but somebody bought 200 of the September 27th 22 calls and sold 200 of the September 27th 30 calls. This happened just a few minutes into the trading day on Monday. They paid 18 cents, took in 3 cents, so they paid 15 cents for an out-of-the-money call spread that they just hope we get a big old September surprise and get a spike in volatility at some point. We could just, even if VIX just ran up to maybe 18, 19 or so, this actually could work out fairly well, depending on how much time you got left to expiration.
Russell, right now, September is on pace to be the lowest volatility September in the last 30 years or something.
I'm sure it's the lowest one as far as we've got VIX for at this moment. Because I think it's always number 2 on the list of highest volatility months. Let me see. Oh, somebody's just a little bit after that. Somebody did a calendar spread. This one's kind of interesting. They bought the September 13th 10.5 calls for $1.14, which sounds absolutely horrendous when you know where September settlement was, and they sold 72 of the September 20th, the standard 11 calls for $1.59. So they actually took in 45 cents when they did the trade. They also got 21 cents on the settlement because settlement for the 913 options was 1071. So they've actually got a fairly decent credit. And if VIX just remains under 11, they're actually going to make some money off of this trade. So as long as they're holding on to the short part of that. Saw a couple of some really interesting calendar spreads here. Somebody bought 50 of the September 27th 11 calls, sold 50 of the October 4th 11 calls, and did that for a 40-cent credit. Maybe they're hoping for a spike in early September, trade out of that one option, and then ain't working so far, but maybe that's what they're looking for. This is a bad trade. I hope they were getting out of a trade, but on Monday somebody bought 100 of the September 13th 1150 calls for 20 cents and sold the September 13th 12 calls for 10 cents. They paid 10 cents for something that probably never had a shot of getting above 10 cents after they did the trade. And that one was pretty late on Monday as well. It's a lot easier for me to find weekly trades on Monday. I said that last week, and again, I had the same situation this week. And it's a combination of trades using this week's expiration, but some that are farther out as well. So apparently people like to trade weeklies on Monday. Just one trade from Tuesday. Somebody bought 60 of the September 13th 1050 calls for 46 cents. Sold the 11 calls for 18 cents, spent 28 cents for something that was worth 21 cents on the settlement the next day. So just hoping for a settlement above 11, I guess. This trade is got me scratching my head. Hopefully they continue to do it in the same size so I can keep up with it. But somebody bought 996 of the October 4th 13 puts for $1.36, and then they sold the January standard expiration 28 calls for 71 cents. This cost them 65 cents. I don't, I
That's
try
a funny one.
Yeah,
that's a funny one.
Time risk reversal
into people's
in VIX.
heads, and I saw a few other ones like this. This wasn't the only one.
Could it be against a structured product, or could it be against some sort of variance trade, or that's the thing is most people we think like the listed market. You should see the weird stuff that gets put together.
I know,
folks. Well, I know but a lot of our listeners don't. There are some really funky things. I got a call one time from the Nikkei magazine, and they wanted me to discuss a structured product in Apple. And it was so weird in that it was short a call, then long 2 calls, then short 3 calls, then long 7 calls, versus long a put, then short some other puts, then short some more puts, then long a billion puts. And it was all set at this weird price. And all this weird, and it was turned to this weird blended risk reversal. And so, the reason why the VIX is such a successful product is because there is a base use in the over-the-counter market. I mean, as much as we love talking our listed market, the thing that really drives volume in VIX is obviously the VIX ETPs, but really the reason there was a use case for it at onset, and that's all these structured products guys. So it's a weird trade, but maybe, that's probably what it's related to. But then again, who knows? Sorry for the diatribe.
No, that's okay. Mark Longo and I were just texting about you while you talked.
All good stuff.
So somebody else came in and bought 500 of the October 4th 13 calls. This was on Thursday, and sold 500 of the October 4th 17 calls. Took in or paid 49 cents for this. They did another 500 lot just a little bit later. And then I got to pull up a spreadsheet for this one. I actually had to calculate some stuff with a spreadsheet. So somebody, this one's pretty interesting, and the numbers are not round at all. So I'm going to round some numbers here. But somebody bought 12,000 plus of the September 27th 21 calls. They pay that the net cost ended up being I forgot to put my prices on here. The net cost was 15 cents on those per contract, so it came to about $185,000. Buying those 12,000, they bought 12,323, and in the same spread, and there's no even number here. They sold 5,822 of the October 18th. Those are the standard options, 17 calls. Those options were trading at 73 cents. So they did do this for a credit. They took in $425,000 on the sell side of this, and the net result was a credit of $240,000 long the September 27th 21 calls, short the October 18th standard expiration 17 calls for a credit in funny sizes for a nice round number.
That's another weird one. That's another, I saw that go up and I was like, why is that guy doing that?
No, it was a guy.
Well, or girl, or that person.
Right.
Excuse me. I said, why is that person
doing that?
Doing that? And I could not. I was trying to wrap my head around it because it was at least one side of it was opening, and so I don't know.
Both sides were opening.
Both sides were opening. All right. Well, so both sides are opening. I have no idea. That's another weird one where, maybe he's timing some move or he's got some weird exposure somewhere, but definitely a unique trade. I will say that.
I assume that's the first step in something.
That's the first step in us diving into the big VIX mothership options run. Now, well done, Mr. Rhodes, keeping tabs on things from London by way of Tel Aviv. Look at you over there. I like it. All right, moving on to the big mothership, the big VIX options for this week, and another fairly active week. And as I mentioned today, as we're flirting with single digits, we were kind of rebounded now, about 1034 or so out there in VIX Cash land, right about halfway, a little bit more now through the show. We've been talking for a while here. And so far today, about 457 on the tape. ADV, though, strong now, about 825,000 contracts. That is huge. That's just a ridiculous number of contracts out there. Not many names out there that could put up that kind of numbers today and just in any given day. And so far for the week, fairly active. Yesterday, the only day over a million, 1.1 million. I say only like that's such a frequent occurrence these days. Tuesday also flirting with it, about 907,000. Wednesday, 745. Monday, 785. I think maybe what Russell's alluding to earlier with the VIX weeklies trading a lot on Monday. That seems to be the time of the week when, at least the last couple of weeks have passed his prologue, that VIX was a little bit elevated at the time. So maybe a little bit more room for them to run out there in the VIX weeklies versus now at the end of the week when it seems like all the juice for the week has kind of been wrung out of the sponge. About 3.2 to 1 calls over puts out there, so not anywhere near as robust as it has been. And what's been lighting it up, what's number one with the bullet out there yet again in the old VIX land, it continues to be, for our hot VIX strikes, the OCC25s still just dominating the list. 655,000 of those open. Again, I mean, you can look at a lot of names out there and add up 10 of them, and they probably still won't have total OI more than that one strike. So a lot of paper open there. Number two, the SEP 20s. It's been back and forth with those two for a while. Now they kind of have settled in at number one and number two. 460, still a ton, but 460, almost 200,000 less than the number one spot for the SEP 20s. Number three, the first and only put on our top 10 here. The OCC12 puts, again, part of that risk reversal, 446,000 open there, followed by the other leg, the third leg leg of that three-legged risk reversal. It was the OCC15s for 419,000. Number 5, the SEP18s. We drop off a bit here. Sub 300, 296,000 contracts here. Number 6, the SEP21s. 287,000 contracts open there. Number 7, the OCC20s, 270. Number 8, the SEP23s. 260, and we get down to about 258 for number 9, the SEP17s, and pretty much everything on the list over $250,000 this week. 252 for number 10, the SEP19 calls, and open interest still exceedingly strong. 13.7 million contracts outstanding, about 10.4 on the calls, and about 3.3 million on the puts. Before we roll on out, we've been talking VIX for a while. Before we roll on out of VIX, anything else catching your guys' eyes out there in the big VIX mothership this week? Mr. Meatball or perhaps Mr. Rhodes? I will take your resounding silence.
Well, I was going to...
Go ahead. What do you got?
You're too quick. The one thing that I did want to point out was the second biggest trade in the VIX options today was actually somebody buying 15,000 of the SEP 21 calls. Just to highlight the, I don't love the trade, don't hate the trade. I just wanted to highlight that you can do size in the weeklies. That's all.
Yeah, there's tons of, if you're going to do real size, there's a tight market there. Yeah, Mark, again, with VVIX kind of where it is, you can't backspread. When the, backspreading is the trade du jour when the VVIX is below in the low 80s or lower. With where we are now, we saw a lot of, just tons of closing September, rolling to October, closes September, rolling to October. And so, there's a ton of open interest on those quarters, on the quarters. They're not necessarily all owners in terms of the street. The quarters, as I recall, was the sell side of a lot of short put, long call, short call, risk reversals. Call spread was short put. I want to say that was a big portion of a lot of those. Also, again, like I said at the top of the show, lots and lots of put rollers. We're starting there was a customer all week trying to buy September 12 puts and sell October. Then the same customer, probably, not 100%, but I think, trying to buy the SEP 12s to sell the November 11 and a halves. Just lots and lots of put rollers. Those are kind of the biggest trades that I saw throughout the week. The aforementioned 50 Cent did do a couple of big trades. I want to say this week he probably bought about 150,000 contracts, he or she. Because did we ever officially confirm that it's that one dude, or is that just
that's pretty much been the scuttlebutt? I think it's that guy. Yeah. Yeah.
All right. Well, so it's the not secret is what you're telling me. So yeah, our friend 50 Cent did put up some decent sized trades. I think if October settles below 13, which it's setting up to be, and if we get a VVIX that gets into the 80s, you will see I think Monday could be a very heavy day for October, for hedging using October options, which is kind of interesting. The other, before I move, the other piece that was kind of interesting is just how little anybody cared about this debt ceiling thing. You would have thought that there would be something interesting about kind of the debt ceiling being December 15th. Then McConnell comes out and says, we're going to let it go to special circumstances. So I want to keep a close eye on the February future because that's, I believe, about the time frame where we start to really have debt ceiling issues in terms of borrowing. So that is kind of the one thing I'm keeping an eye on. You'll notice there's a huge difference between November and December and January and February in terms of VIX futures price. And that is, I believe, highly related to kind of where the debt ceiling discussions are targeted right now.
Since you mentioned the back spread there really quickly before we dive into some listener mail, Russell. That's always been a popular topic of conversation at RMC. Was that at all on the table in Europe, or is it because where the VIX is or where the Europeans like to trade, they're not interested in that noise?
I didn't see that trade mentioned once.
Interesting. Well, there you go. There you have it.
It really is. It was, but that's, I haven't seen that trade mentioned much in this part of the world as it is. I think that's more of a, I'm trying to pick my words carefully for a second. It's more of a U.S. phenomena as far as the people that use that to get exposure to volatility and not pay up for it.
U.S.-centric trade. Hey, it makes money, so maybe not all the time, but it does right. So interesting stuff. Let's keep on rolling. Let's see what you guys have that's interesting. It's time to check in on our Vol voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to it. Your questions, your comments, as well as sometimes our questions mixed and mingled in there as well. We asked you guys at the beginning of this week, hey, first it was Harvey, then it was Irma, now Jose. Who knows what the hell Jose's doing? He's looping out there in the Atlantic. So we, people have disaster prep on their mind. You go out there, you prep your house, your car, your family for disasters. What do you do to prep your portfolio? We gave you 4 choices. There's obviously a million choices. We've narrowed it down to 4 for necessity's sake. And we said, hey, do you want to get long some volatility, as in a volatility product, not buying vol through buying an SPX shop, something like that. We want you, so you're going to buy VIX, you could buy VXX. We don't dictate what it is, UVXY, we don't care. Yes, do you want to buy some vol to maybe secure your portfolio? You wanted to say the hell with it and go to cash or T-bills? Are you into perhaps buying some puts on either the index you're long or a single name stock that you're long, or are you going to go into your quote-unquote risk assets like gold? Mr. Rhodes, we'll start with you because you haven't had a chance to look at this one before. What is your vote, and what do you think is winning?
Index puts, and I'm probably not winning, but that would be my guess.
Interesting. The numbers have changed since even yesterday's option block, where we had some other votes going in. Mr. Meatball, what are your choices, sir?
I'm going to go, I like Russell's idea of index puts, but I don't want to copy Russell. So I'm going to go with VIX, something in VIX.
Something in VIX. Something VIX. There we go. Oh, I'll give you something in VIX. Something in VIX. The numbers are changing. Last night it was index puts leading pretty hard. Then VIX was actually, then gold was actually right behind it. Now it's actually just changed again. Now it's a 3-way tie between getting long VIX, buying the index or stock puts, or risk assets, all at 28%, and only 16% saying go into cash or T-bills. So interesting stuff out there. A lot of people out there, busy with a lot of stuff, so we'll see. But this one, got about a day or 2 left. If you do want to vote, if you're listening to it after the fact on the podcast network, probably a little bit too late, but that's a good incentive for you to get in there and vote early, vote often. Let's see. We've got Volbug. He asked this a little while ago, so let's see if we can get this into the rotation here. He wants to know, Volbug says, you mentioned on the show that our twins, I guess these are our twins, the XIV and SVXY could go to 0 if there is a big enough spike in vol. Would you and the crew be able to take a guess at what level of vol action would result in such an occurrence? Second question, he's squeezing in a twofer here. Wouldn't such a spike send equities out the window also? As always, thanks for the show. Why do I have the feeling that we talked about this? I thought we discussed this exact topic not too long ago. Am I just imagining things in all the legions of shows that I don't know? Mr. Rhodes, didn't we talk about this?
We did, but it was asked a little bit differently. But basically what it would take for one of those funds to go to 0 is a 1-day 100% move in both of the two the futures that the thing is priced off of. If you get a 90% move, I fought with somebody and I was on stage yesterday here in Tel Aviv about this one. Let's say that both the futures in one of these funds goes up 90% one day, and the next day it goes up 10%. It still hasn't gone to zero because of the compounding thing. You have to have the 100% move happen on one single day, and it's never happened.
There we go. I thought we had this conversation not too long ago. So there you go, Mr. Volbug. It is a challenge. It does take a bit of an aberrant scenario. It can happen. It is theoretically possible. Practically, it's hard, as we just outlined for you, but it can happen. You know, I think we spooked a lot of people with this conversation about these things can.
I know we did,
because people have been writing in pretty much nonstop ever since. With wait a minute, this thing can go to zero. I had no idea. It could run out of money. It could not have a cash to cover. Go figure. When you're short things, you know, things could explode in your face, and you can have enough money to cover. That could happen, even in a big fund like this. So yeah, clearly we spooked a lot of people out there with this. Anything to add, Mr. Anything to add there, Mr.
One day 70% move.
What was that, Russell? We missed the last part.
Oh, I just said that the biggest move has been based on the index, which we have going back to 2006. The biggest drawdown's been about 70%.
Wow. In a single day?
No. Peak to trough.
Oh, peak to trough. That's still crazy. When was that? During like the 2011
2008.
period?
Yeah.
Oh, 2008. Okay. Yeah, that's a nice tanking.
Those are some Bitcoin numbers there. That's Bitcoin-esque right there. Those kind of sell-offs.
Yeah, I mean, but shorting vol is so easy. It's just money in the bank, right? Why would I? You can't lose. You just short it and you make money. Isn't that the way it is?
That is apparently the way it is. Unless you're P. Biggers here. P. Biggers wants to know, is it time? Everyone's scamming the rules. Everyone's sending in two things. Is it time to go long VIX? He wants to know, number one. And two, I'll let him squeeze one in because he sent it in live. He also wants to suggest that everyone out there, we sell some Equifax premium. He says the skew is juicy and implied vol. Go figure, implied vol out there at a 52-week high. Not surprising vol would be at a high at Equifax, given that they just gave away the keys to the kingdom for half of the country. So it's probably not exactly. But he mentions, I'd assume this is true, liquidity out there is sketchy. So maybe you want to pick your poison out there if you're going to blast out things. But this goes back. This is kind of the perennial question. VIX flirting with single digits. Is it time to go crazy long? Mr. Meatball, what are you guys out there in Carmen Line doing? Are you loading up? Are you swinging for the fences, sir?
Well, let me hit the Equifax true story first. One, there's no way I would sell premium to Equifax. As high as the implied volatility is, right now the realized volatility is even higher. That is one where let's just put it this way. When it was trading 120, I said, you know what I'm going to do? I'm going to start buying puts in this. It's been pretty good for me. If you're looking for something to sell premium in, I was looking at like TRU, which is TransUnion. They did not have the leak, but their vol is popped, and there's been some activity in the stock's been down, but not like Equifax. Now, as to the second one, I would rather buy a 15 VIX coming from 13 than a 10 VIX coming from 12. So one of the things about VIX is when it's at its most overpriced when it's cheap, and it's most underpriced when it's expensive. So the answer is I'm a big believer, speaking of timing, of just-in-time hedging, going in and getting vol when vol starts to move. Otherwise, you're just throwing good money after bad. That's my feeling.
True, by the way. True featured in the odd block yesterday over there on the option block. So good timing there, sir, for all things true. Mr. Rhodes, anything to add there on P. Biggers? He has the eternal question. Is now the time to get long some VIX?
I have no idea.
That's your official.
Plus, I couldn't say if I did.
That's your official SIBO statement. I know. I got to give you a chance to at least pretend. At least to play.
That's the area that I'm not really supposed to be going into, and I really like where I work.
What fun is a job, sir, when you can pontificate at length about all things VIX. All right, I think it's all the time we got. Everyone's scamming with two questions now, so they're taking up your time. Don't get mad at me. get mad at them, listeners. All right, we got to keep on rolling. Keep the questions coming. We read them all. We try to squeeze as many as we can in. Don't worry. If you don't get on this week, we'll get you on. Don't worry. Meanwhile, let's keep on rolling to our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
And by the way, if you are bemoaning that you don't get on the show, the question, I do tend to favor the people who kind of join us live and tweet in live and that kind of stuff. So if you want a little leg up on the competition, there you go. There's your insight into how we pick some of the questions. All right, let's see. Crystal ball time, the time of the show that can be the most dangerous, the most difficult, and has proven to be yet again this time as we're closing out the show right around 10:33 or so out here in VIX Cash land. So VIX off of the single-digit threat, but still not quite sure what to make of itself. Is it a tweener? Is it a single-digiter? I don't think it even really knows right now. Last week we were all fairly on mark, if not quite as low. Mr. Rhodes, of course, taking the award for the top pick again with 12 1/4. Mr. Meatball is on the low end, 11.01, so he's about 3/4 of a handle off. So he looks like he's the closest. I was at 11.5. So Mr. Meatball, you get pride of place this week. Do you want to go first, or do you want to have somebody else go first?
I think you should go first, Mark.
Oh, sweet. I love to go first. Thank you, sir. All right. It's time to play the real game. So we're looking here. Of course, as we know, North Korea was a big factor last week. All of a sudden this week, as you joked earlier in the show, not quite so much. So we have Jose seems to be doing its own thing out there in the Atlantic. Will it touch the coast? Will it not by this time next week? I don't know if anyone really knows yet. So that's kind of seems to be one of the big wild cards out there. If it goes sweeping, of course, across New England and New York again, we have another Sandy situation that could really change things. But right now, it seems like things are quieting down a little bit. So I'm going to come in next week on the low. I'm going to move that up a little bit. I'm not quite that low. So I'm going to come in next week in the single digits category. We're going to be at, let's go a little higher. I'm going to say 9.8 this time next week. And then next up, let's have Mr. Rhodes go. Mr. Rhodes, what are you feeling next week, sir?
Next week, I'm thinking 11-11, just because I like seeing that.
It does roll off the tongue very nicely, and there you go. You're filling your role as the high guy, Mr. Meatball. How are you coming? Are you going to trump him to the upside, or are you feeling single digits like me, or are you feeling somewhere else?
10.5.
Oh, look at you coming right in the middle. I like it. You know, that means we have a good market, nice tight market. We got range. We got range to the upside. We got range to the downside. We got the smart money on the downside there, and we got all the rest in between. All right, that music means we've come to the end. If you guys have votes, you hit us up with your votes on what you think that fickle mistress known as the VIX Cash will do next week. It's a challenging game, but a fun one, I assure you. But before we go one last time around the horn, let's start with Mr. Rhodes so he can go to bed. You guys just came off of RMC. That's obviously a big deal for you guys. What else is cooking in the land of all things CBOE, sir?
Well, I've got a couple of more presentations on VIX futures in Amsterdam and London, and I'll be talking to you from London next week, the day before I fly home. After that, I'll be back. I wouldn't miss it for the world. Mark Sebastian's class, which I'll let him talk a little bit more about. And after that, I have no idea what I'm doing.
You may actually have to be home for a week. I don't know what you'll do with yourself.
I know.
Sir. You'll go mad. Having to see that family. They'll say, "Who are you? Who's this guy walking in the door with his unwashed clothes from Tel Aviv?" All right, check them out. You want to learn more of the CBOE blogs, the place to go for Russell and everybody else over there who's always putting up great content. Easy to find. Just go to CBOE.com and then click on the blog section. Maybe while you're there, you click around the Institute as well. They got some good learning on hand for you. And speaking of learning, Mr. Meatball, if I too wanted to learn something about options and also perhaps was going to be in the Chicago area in, let's say, 2 weeks or so, what could I do?
Well, you know, in conjunction with the Options Institute at the CBOE, we were doing the Option Pitch CBOE Professional Trader Summit. We got myself, the aforementioned Russell Rhodes. So you've got Mr. VIX and Dr. VIX. And if you're lucky, he'll bring Miss VIX, the Junior Rhodes, and you'll get to meet the entire VIX family. The entire VIX. So on top of all that vol discussion, and there's going to be a lot of it. We've got Todd Gordon, who's a really, really good trader, who's on Options Action a bunch. We've got Scott the Cow guy coming in, a bunch of other this Scott is awesome. Have you ever? I
have. I love you called him Scott the Cow guy. That's all.
He's awesome. And he, on top of being one of the funniest, friendliest people on the planet, the guy's a freaking brain cell and gets it. And he's going to be one of the keynotes. It should be, we're going to do a live option block. I think we're going to do a live vol views. It's going to be a lot of fun. You get to meet, glad hand, and learn. Why wouldn't you want to come to Chicago? There is a link in the show notes.
There's a link in the show notes, or go to optionpit.com to learn more, or he'll tweet it out. We'll probably tweet it out too. See, a lot of ways you can get that link. If you are going to be in Chicago, come on down. It'll be fun to see you. You too can play the crystal ball, perhaps, and guess and embarrass yourself over there in trying to guess VIX. And on behalf of the Meatball and Mr. Rhodes, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. Of course, for tuning in live. We love you guys, too. If you are listening live, go get a beverage, have a snack, take a quick bathroom break. We'll be back in about 27 minutes. If you like all things vol, you want to get into vol gold, vol crude, all the other stuff going on the commodity side of the fence, come back for TWIFO in about 27 minutes. We'll join you live there. Otherwise, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.